Hello and welcome to this weekly market recap for the week ending Wednesday, December 4th, 2024. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it's a pleasure to be with you all again this week. It's been quite a week. We see more record highs being set. Dow Jones Industrial Average moving above 45,000 for the first time. S&P 500 charging through that 6,000 level and now distancing itself from 6,000. We got the NASDAQ 100, which has broken out to a new high. A lot of individual groups like software breaking out again, semiconductor strengthening. So some of the old names that have been leading this bull market the last few years starting to regain some strength. We're going to take a look at all those charts and much, much more right here on this weekly market recap. So let's jump in first and take a look at what worked last week, what didn't work, and we'll go from there. So starting at the major indices, NASDAQ 100 gaining 3.61% over the course of the last week. S&P 500 up 1.46%. The Dow up 0.65%. IWM flat. Mid caps down very slightly, down 0.2%. And then the real weak area was in the transportation area, dropping 2.5%. That's what actually held the Dow back, even though we did close above 45,000. We were held back by those transports, as you can see there at the bottom. So all in all, I thought it was a pretty good week. One thing that you have to admit about secular bull markets, I've studied them for years, rotation, that's the key. So that when leaders start to falter, the market doesn't fall apart. Instead, the money rotates out of some of those recent leaders and moves into some other areas that then take that baton and start leading for a while. That's exactly what we saw this week. NASDAQ 100 stocks all of a sudden coming back to life. And we're going to take a look at some of the individual stocks that have helped lead this rally. But first, let's look at the indices. NASDAQ 100, the leader. Look at the last 4 days. 4 very, very solid hollow candlesticks, breaking out to new highs, taking out the early November high, easily above the second week of July high that we had struggled to get through for a long time, at least until November. But we are clearly in an uptrend here on the NASDAQ 100. I think that is good news. You got the S&P 500 also in record high territory, now closing in on 6,100. The high today, 6,089, almost 6,090. So very, very little to do before we get through that 6,100 level. We've got the Dow Jones Industrial Average, and there it is. After bumping up against 45,000 for the last 3 or 4 days, finally on Wednesday we closed above it, closing at 45,014. Another index that looks strong. PPO looks strong. Looks like it just wants to keep marching higher. IWM, now this was the former leader, a recent leader, had a big breakout to all-time highs back at the beginning of November. We pulled back, filled most of that gap back down to the key breakout level, and then we moved right back up to threaten new highs again. I see a move up, I see a cup, I see a handle, and I'm expecting a breakout here. But right now, I think that breakout's been put on hold because of some of that money that's rotated into some of the more large cap names, some of the names that, again, like I said earlier, led us back in 2022 from the very end of that cyclical bear market all the way through at least the midway point of 2024. Some of those back in style again. We got a lot of investors moving back into many of those stocks. Mid caps. Here's your mid caps. Yeah, they didn't do very well last week, but look at the chart. This isn't a bad chart. We moved up with a gap up, broke out the new highs, came down, rallied off the 20-day moving average, set new highs. And to me, this looks like a little bit of a bull flag. Nice flagpole going straight up, and then a little bit of flag action here to the side. I wouldn't be surprised to see this breakout above 3,400, which could carry us up another few hundred points on this index. So I think this continues to look bullish. And then the transports. Transports broke out recently, but they did it with a negative divergence. They've gone back down just below the 20-day moving average. We might see a little bit more struggling here on this index because of that negative divergence and the fact that we're back below the 20-day. But I don't think this is going to last long. I think we're going to see another big move to the upside. A lot of this volatility is due to railroads, which absolutely exploded back at the beginning of November. had a pretty decent pullback, had another big rally, another big pullback, and you can see that's certainly influencing what we've seen on the transports. Moving on to the sectors. So here were your leaders for the last week. I want you to take a look at the three groups that actually gained ground last week. Start off with technology, XLK, up 4.12%. Then we had consumer discretionary up 2.78%. Communication services, the XLC, which jumped 2.42%. Those are the three very aggressive sectors. They had been lagging for a little while. We've seen some strength in the consumer discretionary, and the others have gone up. But on a relative basis, we've seen more financials, more industrials leading to the upside. More recently, we've had healthcare, which has been bouncing off some recent lows. So the money definitely rotated here over the last week, and it's moved back into some of those aggressive areas, which you can see clearly from this analysis. So let's keep moving. How about technology? Well, all these tops coming in here around 237, 238, they're in the rearview mirror. Wednesday, we break out, close above 241. Really good move there on technology. Discretionary already had broken out. Discretionary has been very, very strong now, going back all the way off of that August low, which was right after the Fed meeting. Had a beautiful rally since then. We were down at 166. Now we're at 226. Big move in that group, and that continues to perform well. And if there's one thing that I follow very closely, it's the XLY XLP ratio. That's one of my favorite intermarket relationships. When that ratio is going up, it tends to bode very, very strongly for more bullish action on the S&P 500. I use it as a sustainability ratio, and you can see discretionary absolutely just flying to the upside. XLC, same thing, a beautiful month in November. We started off December strong, just continue to finish on or near the highs of the day. Hard to say much negative about the XLC. XLV, let me pull up the weekly chart so you can see. Do you see all these tops coming across here at about 137? Finally, we break through 137. Back in April, we go back, we test that 137 level, we move up to a new high, and now on the way back down, 137 is support. It was just 2 or 3 weeks ago, I talked about this area, saying I thought it could rally into year end, and that's what we've been seeing in the healthcare area. We've been seeing some nice rally there. Moving on to the XLI, nice little cup. So while other areas are performing well, XLI is simply going into a handle. So again, it's that rotation. So money coming out of industrials, moving into areas like technology. Then we got consumer staples. Consumer staples getting healthy again. Didn't quite get back up to the high we saw in September, but close. We're now trending again above the 20-day, which is now above the 50-day. The PPO's back in positive territory. So even the defensive groups that have been lagging for the most part over the past few months still look good from an absolute perspective. And that's important because we want everything going up. We just want our leaders to be coming from some of the aggressive areas and also from areas like small caps, transports, and some other key areas as well. Materials a little bit more in a downtrend. You can see with all this crossing above and below the moving averages, I just consider this to be more of a trendless environment in the materials right now. I think that probably continues into year end. So I'm not overly bullish this particular group, but again, it's still from left to right, we're going up. So we are still in an absolute uptrend here. Financials, this is a group just like industrials, loves the fourth quarter, and it has been leading ever since that low in September. We've had a really strong move to the upside in financials and industrials. And so both of them are, on vacation, taking a week off while we see that money rotate in some other areas. Still, this group very, very strong. I would suspect it's going to bounce off of its 20-day moving average. Real estate, this is an area of the market. I just sent out a seasonality report to our EarningsBeats members. Real estate is a group that loves the month of December. So I would not be surprised at all to see by the end of the month, real estate moving back up, clearing the recent highs and breaking out into new 52-week high territory. Energy, not so strong here. Obviously, we had a big move up. We tested the high that we saw all the way back in April around 97. We got a couple of intraday moves up near 98, couldn't get through. There's your bearish engulfing candle about a week and a half ago, and that selling has continued. I suspect probably somewhere in the 90 to 91 range, we will find some support. That'll be at gap support. It'll also be at this trend line support. That's where I would look for energy maybe to make a push back to the upside. But overall, folks, sectors all look good. I mean, if you're looking for me to talk bearishly about this market, I'm not going to do it. I just don't see, price volume, the trends of the major indices of all of our major sectors. These are what drives the market. When the market is healthy, technical buyers are going to continue to pour in. We're going to see more and more money moving into these areas. Will we pull back? Sure, we'll have pullbacks from time to time. I think the 1% to 2% variety, I mean, we see that all the time. I think 3% to 5%, I'm not sure we're going to get all that just yet, but it's possible. I don't see a correction, which I consider 10% move down, or a cyclical bear market, which would require a 20% drop. I don't see those anytime in the foreseeable future. I just don't think the market's headed there. Let's move on to industry groups. Now, I wanted to feature, these are 7 of the top 10 industry groups from the last week. Semiconductors, automobiles, internet, broadline retail, software, and hardware. Actually 6 of the 10. I put the S&P at 500 in here just so you can see the outperformance over here. So over the last week, semiconductors, the #1 industry group. So we haven't gotten a breakout. We got to get through 21,000. So we still got a ways to go on the semiconductors in order to get a breakout. But we are strengthening in that group once again, which is always worth paying attention to, because when this group moves, if we do get a breakout, that could really help the market move much, much higher. Automobiles gaining more than 6%. Internet more than 5%. Broadline retail almost 5% higher. Software 4.5% higher. Computer hardware 3.5% higher. Look at the S&P up 1.5%. Again, this is why we're seeing the renewed strength in technology and communication services and in discretionary stocks. It's because these areas fall in those areas. They're within those sectors. And that's what's driving stocks higher right now. Let's take a look at the charts, though, on each one of them. So we'll start with semiconductors. Semiconductors, here it is. You can see the break back up above the moving averages. Unfortunately, we've been seeing that a lot lately. The key for me is getting through 21,000. I wrote an article in my Stockcharts blog back on the day that this high occurred. I think it was June 20th or June 20 or 19th or whatever it was. But I said once that candle went in on heavy volume, that we weren't safe in semiconductors until we get a breakout. And look across here, we have yet to go through 21,000. Maybe this is the start of a move that takes us there. It's worth noting, but it's not like I would be rushing into the group just yet. Next up, automobiles. So automobiles, big move up, little sideways consolidation, maybe a little bit of an ascending triangle. I think the group looks very strong. Internet breaking out above these prior tops. We just did it today. All-time high breakout on Wednesday on the internet group. So stocks like Meta and especially Netflix, which has been so strong, these stocks have carried the index now back to an all-time high. Broadline retail breaking out above its prior top. We've seen some nice action recently in Amazon. I'll show you that chart in just a bit, but that's where we're getting leadership from there to help us in the broadline retail group. Software, I've been talking about software now for a while. I think this is a group that has caught fire. I think there's a long way to go to the upside. I think this is just starting, but another big move on software, gaining about 2.75% just on Wednesday alone. And that's the entire index. And then the last one I talked about, computer hardware. You can see double top here, just recently making this breakout. And the company, hopefully, that is leading this charge, of course, Apple. And I'm going to take a look at that chart in just a couple minutes. I do want to point you over to EarningsBeats.com because we have been on a roll over at EarningsBeats. We've been talking to our members, having them stick with this secular bull market. We've seen a lot of strength in small and mid-cap stocks. Now we're seeing some of that rotation back. We're a fan of all of it. I do think small caps are going to be your leader going forward, and I've got lots of reasons for that. But hey, I'm not ignoring some of these Mag 7 stocks breaking out. So we feature a lot of, both types of stocks, anything that's working really. We try to follow and point out and put on watch lists for our members. So if you want to become a trial member at EarningsBeats, is a great time to do so. Start your no-cost 30-day trial using that button. If you just wanted to learn a little bit more about us, you've got an area here where you can sign up for our EB Digest. This is our free EarningsBeats Digest newsletter. Comes out Mondays and Wednesdays. We've got tens of thousands of folks that have joined us. It's free. I'm just trying to give back to our community. A lot of trading opportunities, a lot of setups that we talk about. So if you haven't already signed up, I'm not sure what you're waiting for. Come on over. If you don't like it, unsubscribe. It's that simple. So I'm not in a position yet to give you all the details. I wish I was. I just don't have all the information yet. But we do have some big news coming. So on the screen, you can see there is a QR code. And if you scan your mobile device on that QR code, it'll take you to a landing page that doesn't have a whole lot on it. But we are going to be announcing some big news, and you're going to be the first to hear it. And you're going to want to be registered for it anyway. So this is kind of, think of it like pre-registration. And you can always, again, unsubscribe, not go to the event. But I'm waiting to hear. I think I've got a couple people going to be joining me, and I think it's going to be a huge event coming up as we get ready to go into 2025. So anyway, if you want to learn more about it, stay up to date, go over, sign up with your name, email address, and we'll let you know exactly what we're up to. But it's going to be a lot of fun. But I got a couple folks I'm trying to get to join me. We're going to have one heck of a time. Anyway, let's move on and talk about some of these Mag 7 stocks. So here was the performance of the Mag 7 last week. So Meta was the big winner, 7.8%, Tesla 7.5%, NVIDIA 7.25%, Amazon 6%, and then a few that lagged a little bit, Apple, Amazon, and Google, but still up, all of these up more than the S&P 500. So if you want to know where that push is coming from on the NASDAQ 100, you're looking at them. The NASDAQ 100 is a market cap weighted index, and these are 7 of the biggest market cap weighted stocks in that index, and they're all outperforming the S&P 500. Now, if we go look at them individually, which I want to do real quick here, we got Meta breaking out to a new all-time high. Looks awesome. Didn't mean to start with that one, though. Let's start with NVIDIA. NVIDIA making a breakout here above the moving average. Still got a little bit of resistance clear up around 150, but overall looking pretty good. Then we've got Tesla from the auto group. Tesla trying to make another breakout at 360. Keep an eye on that one. Meta, as I mentioned, already made the breakout above that 600 level. So this one looks poised to go. Amazon broke above the all-time high at 200, went up to 215, came back down, came back into a support area between 195 and 200, and then took back off. And look what happened today. Made a breakout. So a nice move on Amazon. Apple making the breakout above this double top, getting up to 243 today. So Apple helping to lead computer hardware group. And then Google, probably the one that's looks the least bullish to me. Not to say it's not going to break out, but it's really been struggling. 3 months ago, it was trading up near 170. Go back into the end of July, it was just above 170. And here we are right now at 174. So it's just been a lot of sideways. We're not really seeing a lot of strength in Google or Alphabet, although you can see off the bottom in early September, we have moved higher. It just hasn't kept pace with some of the other Mag 7. So we'll keep an eye on it, but I don't think now is the time for Google. A few other stocks I want to go over, and these are stocks that I've been sharing with our members, either through our daily market report or through our EB Digest that I just talked about. Some of these stocks have just absolutely exploded. And what we do is when these stocks come out with good earnings, we put them into our strong earnings chart list, and we wait for these key pullbacks, like this one, back down to the 20-day moving average. 3 days later, 4 days later, it's back at the high. That might not look like much, but if you get in on the 20-day at 54 and you can get out close to 60, that's a 10% move in 3 or 4 days. And you have so many of these stocks doing this right now. That's the beauty of having more breadth in the market and having small caps and mid caps leading, or at least participating, is that it brings a whole another level of stocks, hundreds and hundreds of stocks into the fold to trade. And many of these small caps, when they move quickly. So you can literally go from one stock hitting support, riding that up for a few days, move over to another stock. Let me give you a couple others here, a few others. Here's Hyatt. This is one that I pointed out. Look at all these tops between 160 and 162. Look at today, the volume started to pick up a little bit. We finished at 161.81. I think that is right up against 160.190 was the high back on July 16th on the close. So we're right up there trying to make a breakout on Hyatt. That's one absolutely to keep an eye on here. By the way, hotels love the month of December. Hyatt is in a period seasonally from, I believe it's October through February, where it averages going up about 18.5% per year over the last 20 years from October through February. The rest of the year is slight negative. So we're in Hyatt's sweet spot. So if we make that breakout, you need to be aware of that. Nutanix, NTNX, actually just sent this out to members yesterday. It's a stock that had broken out, but had pulled back and came all the way back down to test the 50-day moving average. Look at that piercing candle. I think it's starting to work its way back up. Great potential trade there. RL, this was a stock that I actually put into our daily market report down here at the low. And I actually annotated what I thought could be a cup right at the bottom. This was out on November 19th to our members. And so I drew this line coming down and then back up all the way to the top. Look at what we did. Right about a week later, maybe about 6 or 7 days later, right back up near the top. And so now take your money and wait, maybe see a handle form back to the 20-day moving average, something like that. That's a heck of a move from down near 200 back up to 235 in the course of about 6 or 7 trading days. That's almost 20%. So big move there. Dox was another one. I don't remember the day that we put this one out, but again, it was down here around this low, and you can see the big rally off of it, and it's continuing to push higher. I think we're probably going to get the rest of a cup on DOCS. ISRG, now this isn't small cap. This is starting to get more into the larger cap, but this was one after earnings came out. It broke out to an all-time high, pulled back to the 20-day moving average. It was featured on our daily market report, and that was back at 500. Now the stock's sitting at 550. Again, there's 10% in a month. TTD featured this one on November 19th as well. Double bottom right here. This was after earnings. Earnings came out. We gapped down, rallied back, filled the gap, went all the way back down, put in a double bottom, talked about it right here. We got a reversing bullish engulfing candle. And now look at where we are from 117 to 140 in 2 weeks. I mean, it's just stock after stock after stock that's doing this. CRM on my show that I did Tuesday morning over at EarningsBeats, I said I thought this was one that was going to gap up with its earnings. Well, it came out with its earnings yesterday after the close. Today yesterday we got great results. Today we got that gap up at the open. Stock was up 11% heading into earnings. So I explained why I like that stock going into earnings. And so there you have it. Now, a lot of these stocks come from our strong earnings chart list. So the last thing I want to do, this is a chart list. I'll show you. We'll edit this. It was just updated on Friday of last week. 450 companies. This is like the ultimate watch list. And we could literally go in here and start looking at, let me get the more recent ones, but we could start going backwards and looking. These are stocks that this is a stock that gapped up with earnings. Great support if we ever get back down there. I just like to keep these. Here was NTNX, which was one that I just featured for members. There was that reversal off of support. EMBC, big move up. I've highlighted a couple of key support levels to watch. CrowdStrike made a big move. Look at this coming back down. Actually, it looks like hit the price support level and also kick save off the 20-day moving average, heading back up. It's stock after stock after stock like this that we keep providing for our members. Anyway, if you'd like to learn more about us or you want to follow me at earningsbeats.com, I've got another QR code up on the screen. Take your mobile device, scan that code. It'll take you to a page where you can follow us at EarningsBeats, learn more about us and all the things we do. We do try to do a lot for the community, but obviously we do a whole lot for our members. And so we'd love to have you check us out. But that's what I have for this week. I'm going to have to take a break. We went through a lot of stocks, went through a lot of indices, sectors, and so forth, but tried to give you a really good look at where we are right now. I think the market is set to go higher. Yes, we will get pullbacks from time to time along the way. We do have one period in December that we need to be a little careful of. I pointed that out to our members just a couple of days ago. But outside of that, I think the market is ready to go higher. I actually think 2025 at this point in time is going to be a pretty good year. So anyway, I'll be back next week. Follow up on all this that we talked about. We'll see where we are and highlight what's important. Do have a big jobs report coming out on Friday. Just wanted to mention that. But anyway, I'll see you all next week. Have a great weekend ahead, and I'll see you next Wednesday or Thursday. Happy trading, everyone.